Alrighty, waiting for the February CPI report. Now that we have a time change, Doc is going to be talking right through the news, which is going to be very interesting, and we'll be able to interpret it through our math, through what we see, what spin certain people like to put on it. They're all trying to dress up, what they call it, put lipstick on a pig. I think that's something like that. So this is Doc from North America. And the news is already out at this point. So let's get it up on the screen here. Let's see, where do we go to load? There we go. There's upcoming streaming. There it is. Let's see how it looks. The stock market is not doing anything. Oop. Commercial. Okay. There we are. All right. So the news is out, and the stock market. Let's do this. There we are. Let's see what we can find here. Up 0.4% on the CPI. Let's see. They were looking for a little bit hotter. Just a little bit, nothing major, 3.2 as we kind of remind. Okay, now stock market is down. Dow Jones is down. Nothing major, down a quarter percentage point at most, down around 80 points. You can see, let's see, what else we have? I think, there we go. We're starting to see all the things start to adjust. And let's go over to, should we do something live? Let's do something live. We always get a kick out of the live. Right there. There's live. As soon as the news came out, where is it at? Right there. So I'm going to read that right. Yeah. So the news came out right here, and they dropped it down, and now we're right back again. So not much meaningfulness. We all know that there's inflation. We all know that there's going to steadily, consistently be inflation until Mr. Biden is gone. So it's like, why throw the baby out with the bathwater? I guess that's the best way to look at it. You can see there now. It's actually higher now than when the news came out. So it's like, we know that it's not good. We know that this is something that Janos at DocDow had mentioned years ago about how he made a few videos about it, about how to trade live financial information, and how it has changed over the years, where now instead of something like this came out, see how it dropped here? Chances were is that it might go on off and on throughout the day, and then possibly even to the next day. Now it goes on for about a minute, sometimes 30 seconds, dramatic move, and then it's all over with. It's because money managers are not fully invested. Money managers are just treading water. If anybody swims out there, that's what we refer to around here. When you're swimming in the water and you're not swimming hard, you're not racing, you're just treading water. Money managers are doing the same thing, and that's why they enormously underperform now for pretty much over a decade. Most money managers underperform the market. So just the idea of getting a return excites investors anymore. Remember, we just went through almost a full decade, 10 years of billions and billions of dollars being invested at a minus. Now, what does that mean? Doc's saying that billions of dollars or euros or pounds were invested at a minus. Meant that when they put money into something, they weren't expecting to make money back. They were willing to lose just a little bit to guarantee that they got $952 million back. They didn't want to put $1 billion out and not basically get like close to $1 billion back. If they lost $30 or $40 million, it was okay. They were willing to pay to have that security, and that's what they did for over 10 years. Now, ever since I guess you could say since the inflation, it has kind of confused it all, in the sense that they didn't know how to adjust for the inflation, and so they had to start paying something out because they couldn't be they couldn't double dip, I guess you could say, take twice. Not only do they not the governments get paid to hold your money, but at the same time your value of your money went down even more. So they had to do something to compensate for it. So some form of sanity, I guess you would say, financial sanity, financial reality, something of that nature had to happen, and thank goodness it did. I mean, it would really give us all confusion and disappointment if they can't figure out that when you invest money, you're hoping to get it back, all of it, and then make some at the same time. All right, as we sip our tea, what's going on here? So let's go over to, since now the noise, I guess you could say, is over with, and it was a hotter inflation number, and now nobody cares because you can see right there, it's higher than when it came out. So it's just the reality that we live in, and I know that a lot of people hate hearing about reality. All right, let's go over to the dollar index. And there's the dollar index. You can see the dollar index is trying to lift up a little bit today. It had gone into the sell back in here, and we glided down to there, and then we almost got into the buy yesterday. We had a green and a red, and now we're there. We're back in there. So they're saying, that inflation means maybe, interest rates are going to go up a little bit more. Okay, yeah, maybe so. Let's take a look at the, well, we have that there. Let's see if we can put the bond. Let's see, where's it at? Bond, ZB. There. We're going to go like this. We're going to put the bond on the beta. Let's do this right here. There is the 30-year bond right there. And you can see it's trying to, punch. It went down yesterday. In other words, interest rates, when this is going up, that's the price of the bond. The price, what you would pay for the bond. That defines, obviously, the interest rate you receive. And so when you see it go down, like it did there on Friday, and then on Monday it went down again, and it's in a sell now for a day and change, I guess. Let's see. 2 days. This is the second day in a sell. Let's see how it looks right there on the other platform. No. Okay, so that is still not going into the sell, but the beta has pushed it into the sell yesterday, and kind of justifying the drop. Now, that's not really reflecting it very well. Let's just go over here and show you. It's showing you today. That's today. Nope, that's yesterday. It goes into the. Let's see what it does right now. Let's fix that. Right there, and go to there, and this should put it in there. This should put it in there. Where is it? Where did it go? Alright, let's try that again. Let's see where the bonds are trading at the moment as we speak. Let's go to interest rates right there. Let's do that. Let's try that one. Huh. Interesting. Having little issues there, aren't we? Interesting. Let's put that bond in there. Was that ZB, right? Just put it in there. Enter. And contract. And June. Alright, so the contract is actually up 4 ticks now. So it's not let's see what's going on there. And let's try it here again. It was doing fine when let's try this here. I want to see it on there. I want to see it on the screen. So it was down, now it's up. So let's see, it's up 4 ticks. The price of the bond is going up, which means interest rates are coming down. Now, obviously, when we look at the dollar index, it's trying to tell us the opposite of that. That's kind of curious. Just shows you the lack of direction of all the markets in general anymore. Let's see, let's go like that. Let's see if that'll straighten it out. None of it's straightening out. I don't know what the malfunction is on the bond, but we'll just, let's see. Let's see if we can add this. let's see. There, format. Because we want to see it. Let's see, instrument. Add symbol. This symbol's always looked kind of odd. Since we put it in there, look up. I don't know, it looks right. There we go. And close. And that's an interesting one too. Let's do that. Add, no, look that one up too. Add. And just do that again. Add. There we go. Now let's see if that'll straighten it out. I guess it goes at. Let's try at. Shift at. Oh. Don't see anything on the chat line either. No one seems to care about asking a question. Let's put the ZB in there. Because I want to see this thing. It's still not doing it. I don't know what the problem is in the bond market. The vigilantes are loose. I guess that's the best way to describe it. The vigilantes are loose. All right, so we're just going to go back to... Excuse me. Go back to... Woo! Sneezes galore. There we go. All right. So we'll hit the... Oh, okay, there it goes. It finally filled in. Okay, so where's that? That is yesterday. What is today? Show us today. That's better. Now it's matching up very well to... Let's see the settings. Let's move that thing out of the way. Nope, not really, but let's do this. There we go. All right, now that makes sense. It went into the cell on our beta yesterday right there. I knew something was wrong here. That's why we're building this beta. We're getting fed up with all the work we have to do to keep these things straight. And that is it right there. You can see the second day just up a little bit. Let's see, yesterday it settled at 18. It was just trading 19. Now it's at 20. So you see 121.19. So it's just one tick up. And you can see the dip it made. And that's where we're at. And that's how, this is the inflation factor. Welcome to the inflation factor. All right. Now, from there, we'll go back to, we're seeing the dollar index, isn't that right there, trying to lift back up again after, I guess, 5 days, 6 days, something like that, in a sell. 1, 2, 3, 4, 5, 6, 7, and then it tried to get into the buy yesterday, and you can see it there today, and that's why our beta gives us a good idea what's going on. And you can see the weekly went into the weekly sell last week. We basically can get rid of that, remove, and turn that into the pink. There we are. So it went into the weekly sell last week. It's on the close of this right there, and you can see it's up a little bit the last 2 days. And we have the answer to the CPI, which was supposed to be the big, hot and heavy thing. In other words, in the end result is I don't believe anything is going to change until the election at this point. And if anything collapses down, it's because it's a major catastrophe, out of nowhere. Meteor heading towards Earth. I don't know, something of that nature. It sure isn't going to be the financial or the political, because we're all living in it now, and it doesn't seem to care. All right. So from there, let's take a look at the euro. Let's see what the euro is up to this morning. Right there. And there's the euro trying to lift up, and at the same time it's a green and a red, and the algorithm itself is dropping underneath the zero line. You can see it there, minus 0. ZZZ46. That's it right there. Weekly's holding up fairly well. It's not doing anything particular. And this is the euro. It's just kind of hanging in there. And this is going to be, I guess, in some ways, just sell like call spreads and bear spreads way out wide, and just keep on selling them until the markets actually wake up to all this adventurism. We haven't had a good adventure since, I guess, when you look at the stock market. Let's put it up on the screen here. There's the S&P 500. Let's see. Let's try that again. There's the S&P 500. I mean, it really does look like a flat line. I was playing with it yesterday, trying to make it look more readable. But look how tight it is. It's been bouncing around between a 200-point range here, and then this is what 4,700 right there. 500 range for 3 months, something of that nature. Basically around in here, and we haven't had that big massive run for a while, but it's acting pretty firm in here. And then at the same time, that is going back to November of last year. That made that nice low there, as you can see right there. And then let's just go over to Bitcoin and check that out. Let's do it over here too. Oh no, it won't go back that far, will it? No. I do miss the J4X. I tried loading it up again, remote account opening. I didn't want to do it. I just didn't want to do it. We'll have to work on that again. It's another day of, another day of not being able to go back and look deeper into a product. And that's something I like is, we look at dailies and weeklies, and I'd like to go back further and look at them. So in this case here, let's see if we can get Bitcoin on some level. Maybe right there I'll do it. We'll go back to November. Right there. All right. It barely shows as a dip, does it? I guess it does to some extent in November, like here. We finally started to take off in the 20, or maybe a 30 area. And now it's at the $64 area. It's over doubled. And then when we go, let's go to beta. Beta shows us a good solid 10 weeks of clean, clear cash Bitcoin. Right there. There we are. And there's Bitcoin. And you can see Bitcoin, there's from January, the beginning of January, or mid-January. And it's gone from the 40,000 area all the way up to the 70,000 area. So they're obviously, one thing for sure they're buying, and they're not afraid to buy, and that is the Bitcoin. The cryptos. Somehow or another, there's so many stories, there's so many speculations, there's so many, ideas that don't come, they don't happen, but they're talked about. And the idea of confiscation of American dollars by the government, so let's buy cryptos and then they can't do it, that type of thing. I can't imagine it. You can see here they're trying to do it to Mr. Trump. They've done everything they can to do it illegally, and it's not working. They got the Justice Department, that they've got the FBI. They've got every tool in the book that they can try to do to take his equity away from him, and it's not working. And the Supreme Court is straightening out their acts because in the end result, the law of the land will survive or will supersede somewhere along the line. Might not be tomorrow, might be 2 months from now, might be 5 years from now, but it will supersede in the end. And the compensation will be made back up. And so in this case here, you can see they're running into the cryptos because A, there's a limited amount of them. B, people feel a little comfortable to have a pair, a way of, selling dollars and buying another asset that could be more stable in some way, and that's the Bitcoin. That's the way they see that there. And it doesn't, it's not changing the attitude. I don't. I mean, I've been a big crypto fan for a long time, so I'm not. It's not any surprise to me, and I'm very glad that it exists, and I'm happy with its abilities to be a new form of transaction, and I can say lots of positive things. But at the same time, when we look at the dollar index, it's basically the same animal, just in a different form. So when we go back over to the dollar index, let's put it up over here. You can see here it's trying to pop up. It's trying to get some action going. It's trying to get into the buy. It's been in a weekly sell for 2 weeks. We'll start to see that probably by the end of the week making its turn. Over here on the old platform that we use still until we get our new one running right. Let's put it up on there. There it is. And the weekly, same thing. Couple of weeks in a sell. It's not turning yet, but it could. It could start to see these two lines making it through the manifold on the negative side, and the next thing you know, they're climbing up. So, my opinion of all of this and what we're actually seeing from all the news is that the markets don't really want to do anything until the new policies come along. And this is probably one of the more dynamic and dramatic periods in American history. We've never seen anything like this before when it comes to government interference in everyday life. Ever since the COVID, some want to believe it's real, some want to believe it's not. We believe it was more of a political thing, not an actual illness, because we also know that it cured cancer and it cured heart disease for 2 full years. And so we had almost no deaths in heart disease and no deaths in cancer. And then all of a sudden, COVID seemed to be all the deaths. So the question mark is, okay, did it cure cancer? Did it cure heart disease? Or were they just reporting things wrong? And that's what a lot of people question every day. All right, from there, let's go over to let's go back to the euro. We'll go to the British pound unless someone wants to see something. There it is, right there. And so there's the British pound. See, moving down a little bit. It's been a little bit weaker than the euro against the dollar of late. You can see it's trying to slide into the daily sell there compared to... you can't see that. Let's do this. Right there. So you can't see the euro. It's not... Oh, yeah, it's doing it too. It's dropping underneath the zero line. It's breaking down a little bit in here. Nothing real. Again, we don't really believe we're going to see much action. Yeah. So, we're traders just... I kind of think in many ways there's a lot of easier ways of trading the markets compared to usual. Compared to the norm. And that is that I have a hard time believing that they're going to really do anything more than, if, let's say you needed to liquidate a major fund and a couple $1 billion, let's say, a 30 or $40 billion fund had to be liquidated. That would put pressure on the market. But more than likely, it would turn into a buying opportunity for the strong hands. Those who knew how to use the derivatives with their assets. Those that were not taking enormous risks. I mean, every day I look at this one particular fund, the ARK fund. There's this woman that is supposedly a brilliant person in the, I forget what her name is, but supposedly brilliant. But her fund is down from something like $175 down to, see if we can put it up on the screen. Here it is. I watch it every day. Just not every day closely, but I take a peek at it. There it is right there. You can see it's trading in the $50 area. Let's put it up on the screen here. There it is. It's bouncing around. It was in the 48 area. It's really not doing too much action in there. And when you look at that, and they always talk about her as if she just, can walk on water. I mean, honestly, it always amazes me. At the same time, hey, Robin. That's it, Kathy Woods. And then let's do it this way. Let's put that same product in something we can look back deeper. And there it is right there. Let's see, what's the symbol of it again? Let's see, let me just go back to it. Symbol is ARKK. And you know, they rave about her like as if she can do no wrong. I guess it's still like the marketing side of finance, you know. And then what we'll do is we'll put in a 5-year chart, and we'll make it full screen like so. And then we'll let's see, what we'll do is we'll see, just hollow candles make sense. I don't know. I want to see it the best possible way. Colored bars. There you go. That's nice, like that. And that's, let's see. And then when we tighten this up, there we are. You see, it was over $150 a share. So she's down, you know, 66% since 2021. That stock I showed you had fallen as low as around it was at $31, something like that, and now it's been trading in the 50s up in here. You know, you see that right there? If it will go up there. There it is. And somehow or another, they talk about her, like every day on the financial channels, they talk about her like, she's buying this, she's selling that. And it's like, okay. Let me know when her fund gets back up over $160, then I'll pay attention, you know. Just because it's bottomed and hasn't gone bankrupt, they seem to love it, and it's the weirdest thing, you know. And that's what we're here for. We're here to show you this is all absurd in many ways. Some of the things they do, and that's why currencies are a lot more interesting to trade than stocks, because the amount of marketing that goes on with the stocks. I mean, if any one of you out there had taken a current or a stock and taken it from, you know, like the 30s or 40s all the way up to $165 or let's say $160, and now it's trading at $50, and so it's basically 66% down. Do you think they'd be cheering you on, telling you how great you are, how smart you are, you know? But they do that, and I'm totally perplexed by it all. That's why we show you our work live every day, because it's there. You don't have much of a choice to. You can believe it or not believe it, but you can sit there live watching it at the same time. It's actually ticking away live, you know, making money. You know, something that they seem to have lost. They've lost that concept that you should be making money. They like the spin more or something of that nature. So, anyhow, how I drifted out of the cable from that. You know, both cable and euro are doing fine, but they're weakening at the moment, and they're in weekly buys for the last couple of weeks, and it's been okay. You know, it's been a nice drift up. Let's see, what else can we say? Let's do this. I want to go over to this short intraday just for the fun of it. Right there, yeah. Where are you? Right there. Woo! Look what they did to the poor currency when that news came out. Went into the, well, see, our math caught at that time. This is the intraday. Went into the sell there. See, right there. And they crushed it. It happens a lot of times. And then it found its way back up again. And it went back into the buy here, and it's up, and then back into a sell here again. And we're going down again. You know, and so that was an interesting wild. Was at 109.40 and traded down to 109, what was that? 109, almost even, I guess you'd say, right around there. 109.02. Almost got to 109 even. And it comes right back up again. Talk about a schizophrenic market, huh? Truly a schizophrenic market. Let's see what cable looks like on the same situation. Same situation. Slam doodle. Back up above. Now it's slowly drifting. I wonder if the stock market is doing that now. Are we drifting on the stock market? Let's take a look and see. I guess we are. I guess we have to tighten it up to be able to see it. There it is. Okay. So this is where the news came out here. They ran it all the way up. Looks like it got very, very close to coming down here, but it hasn't yet. But it's trying. You can see we're in the buy from right there. That one right there. Both colors are above the zero line. And sure enough, it went up. And obviously both colors right there are below the zero line. And it went down. Both colors went into the zero line on the plus side, and it went up. And that's the action. So I guess maybe the stock market might come back down in here. I don't see. Like I said, I believe that it's going to take some dramatics to get things to sell off, or make big moves. In other words, some fund that blows up, and they've bought too much Kathy Woods. I guess I don't know. Something of that nature. It'll take something like that to put pressure on the markets across the planet, because I really believe everybody's sitting and waiting for the election at this point. And that's pretty much the name of the game. Bitcoin, they're saying, is off $500. So who cares? It's just background noise at this point. It's going to stay firm, because let me just go back to Bitcoin on our beta. Because it's been looking beautiful. Beautiful. Right there. And right there, there's the... Is that it? No, that's not it. Right there, there's the Bitcoin. It's just off a little bit, meaning not much. You can see all the strength in it. And you can see, 6 weeks in a weekly buy with no problem. All right. Now from there, what else can we talk about? We go over back to the currencies, because this is mainly a currency conversation. And I try to show you how it connects with all the other products around the currencies do. So we'll go right there, and we'll take a look at the Swiss as they battle the inflation. They're getting ahead of the curve. I'm impressed. Looks like there's a little buying in it today right there. You see it's trying to get over the zero line. We are green and red right now, just like yesterday. So it's having its issues, still trying to get going. The weekly is trying to dip down. It's broken the manifold here, but it's still holding up above the zero line. So we're breaking down with some weakness, but it's not, nothing particular. Like just when we went into the weekly buy down in here in the 86 area. And we're still stuck around the 88 range, I guess you could say. Trading at 87.77 right now as we speak. From there, we'll take a look at the yen. And there is the yen. Nice bounce today. Look at that. It's been in that sell for, let's see, where is that? Right there. Took a nice dip. We closed in a weekly sell. Still feeling that weakness on the week-to-week basis, and then yet today they've, because of the CPI and so forth else, whatever money managers fantasize and rationalize and anticipate, whatever you want to call it. And the end result is they're buying it today. And I'd imagine, let's see, are we going to be seeing the Nikkei? Let's go put the Nikkei up. We did that yesterday. Tried to show the analogy between the measurements of different products. And the Nikkei, showed how it was, retreating. And you can see right there, it was up last night. It's pushing. And the weekly is in a... Oh, you can't see that. There we are. And so you can see here, it's trying to push its way back up again with the currency trying to move back up, which reflects inflation. So as the currency goes up in price, it's getting beat up by inflation. Alrighty, from the Nikkei and the yen, we'll go over to the great experiment, the Turkish lira. Ooh, those poor people. All right, you can see here, closed at another all-time high yesterday, made an all-time high yesterday too, and closed at an all-time close yesterday. That's what that is. And today we are above the close of yesterday, so we're flirting. Now you can see here our manifold, the histogram. Got the algorithm broke the manifold right there. Now it's broken the zero line. We're trying to break down, but we've been in a weekly buy now for like 26 weeks, so over half a year. And it's not rare for this product over the last 8 or 9 years to go into weekly buys for. We've seen them go as long as 54 weeks at a time. In other words, over a year at a weekly buy, and the product doubles and triples in price, going up. Same thing, and we've seen it go into a weekly sell for 6 or 7 weeks. And it tries to go sideways and down for a while, and then they readjust it, or the government treasuries do something where they tried to give away free puts 2 years ago. That excited things. That was interesting. It didn't last long, but I was very positive about the idea, them giving put options away to investors. This way they would buy the currency and hold on to it because they had a put to protect themselves, but obviously the government did not pay them the money when they promised it. I wonder if there's a lawsuit to that. I wonder if you can even sue for that in Turkey. Who knows? But in the end result, it failed. They didn't pay the people that had the puts, and so in the end result is that the currency went flying up and losing more money. When the currency is going up, it's losing money. When it's going down, it's gaining money because there's less of it. When it's going up, there's more of it, and that's the inflation factor. All right, and then from there, we're going to slide over to the South African Rand right there. You see that Rand, those last couple of weeks, keeps on trying to press its way down. And we mumble every so often about we think it's overvalued, undervalued, overvalued. I think it should be 13. It's trading at what? Where's it trading at now? I guess it's trading at like 70 something. 1867. I think it should be around 13 compared to where gold has been. That's what started that conversation yesterday about between measurement of, what was the title yesterday? I thought there was an interesting title I put out there. The title was, another day that ended on a nice profit. Good. I'm going into, where's it at? There it is. All right. Okay, there we go. So yesterday's title, let's see what yesterday's title was. It was about measurement. It was talking about the idea of, we think that the currency, this particular currency, South African Rand, should be down around the 13s compared to what it has done for decades. And obviously, it's not that way ever since the president had his problems over a year ago now. It's a year and 3 months or something like that, where the president of South Africa, they found $500,000 in cash in his sofa, in his office, type of thing, and he refused to resign. And they said, well, why do you have $500,000 sitting in cash? Let's see. And the title yesterday was, Market Standards Are the Measurements. Yeah, and so, we look at the price of a currency, and we look at a price of metals, and we try to get an understanding of how they align with each other, or stocks, or bonds, or commodities. We'll see how they have worked historically in the different directions, and that is really the true answer to it all. And that's pretty much what it comes down to at this point. Is that trying to understand the relationships that we use for measuring if something is overvalued or undervalued. Is it realistic? Is it not realistic? That type of thing. So you can see here with this going down like that, normally what happens is that gold goes up in value. So let's just show you the gold. There's gold right there. Gold has been climbing up. Don't mean to do that. Gold has been climbing up and away, going from the $2,000 area to the $2,200 area, picking up 10%. Is that 10%? Yeah, it's 10%. $100 on 1,000 would be 10%. So $200 on $2,000 would be basically about 10%. All right, and so you're looking at here, you can see it's trying to start to back off a little bit, and then we go back to the rand real quick to take a point out the situation. You see right there, it's bottomed out for the last couple of days, trying. It made a new low today, but it's been hanging here. There, closed there, and it's on top of this particular Fibonacci line we've been watching, and so it's come down to that Fibonacci line, stopped, and it's trying to hold in there. And you can see the weekly went into the sell there, and the fast joined in about almost a week earlier, and that's the blue dashed line. We kind of follow the green more. We like to use the blue as a reminder of what it could do maybe over the next couple of days, not what it's doing right now, and then we follow the green as what it's doing right now. And so it's a conservative way of looking at it. And you can see here this thing is trying to break down, and that's an interesting thing right there. This is the South African rand, and what's really curious about it is when we go back to the gold is about the same thing. It's only a couple weeks, just like this is 2 weeks, and when we go to the gold is the same way. It's 2 full weeks there, going on a third week. It's been pressed. Let's put it this way: they didn't. Robin was saying to me how much they've been holding these metals down. And I guess people were finally getting fed up with it, and they probably loosened up some inventory. In other words, they sold some off. And when they did, notice it goes down and then up. You can see that odd hard drive down of about, it's like a $40 move. That's a $50 move that day right there. And that brought in the buyers. And it just takes off. 2 days later, you see that they come in, they slam it, they send it down about another $4 or $5, and then the next day, you see it tries to close in a buy, but the algorithm hasn't gotten there yet. Then the next day, it gets into the buy, and it's been in a buy all the way out to here, and now we're just starting to flirt with the sell side. We're right at the edge of the line. And then I guess the bigger question is it inventory that can affect? Oh, there we go. Hey, Janos, any opinion on CPI? Yeah, I was saying basically is that the CPI, I keep on expecting to see it firm up. In other words, inflation is going to be increasing off and on in different forms over the next 3 months. So where are we now? We're in March. So April, May, and June. And so somewhere around June, if they don't, it should top out going into June, July. And with that, there's a very strong feeling they may drop an interest rate 0.25 percentage point in June. We'll see. It all comes down to, I follow the what they call the core rate, and I follow it on a 3-month ratio, right? 3-month average, and then I take 12 months out. You go out 12 months and put that in there. So it's the last 3 months, and then I go 9 more months out there. So it's the full year, but it's only 4 calculations. And when I do that right now, I've been doing that, I do that all the time. And so what it's showing from this one is that it's going to keep on rising. Inflation, and so that's pretty much what's going on. Is I think that it will rise all the way up until June or July, and then it should slow down again. And so money is looking at that and thinking, well, they first of all they think Trump is going to win since he's up in the polls all over the place. And the lawsuits don't seem to have any meaning. No one seems to care about them anymore. And the Supreme Court already threw out one of them, and they're going to throw out probably more of them. It's just a matter of time of getting rid of them. So what it comes down to more than anything else is that the markets, have gone now from expecting 7 cuts to down to like 3 cuts. but they're not willing to basically notice the market itself is still way up from it. This anticipation of 7 cuts is not being reflected in the lowering. See, the Chicago Mercantile Exchange has an index on it's like a anticipation index. What do you think this is going to do? And so it's been reflecting. That's where we got the anticipation of 7 rate cuts, because the futures contract was reflecting it. Now it's down to about 3.5, something like that. It's lost half of it. The stock market has not lost half of it. In other words, the stock market's still just sitting here. So my opinion basically is that it's going to keep on sitting here, and it's going to take something dramatic. Some major fund that has to liquidate $60 billion of assets or something like that, to hurt the markets. It's going to have to be something dramatic. They're not going to be willing to just start selling or liquidating because some stat or anything like that. You can see, like here, let me just go back to that intraday. There's the intraday on, what is it? Okay, so we go like this, we move it over. There is the intraday of when the news came out, and within 2 minutes it had been fully bottomed. Not even 2 minutes. It bottomed. There is 2 minutes right here. By the time you got past 2 minutes, the product was almost back to where it was supposed to be. I mean, where before the news came out. So the news showed inflation, but nobody cared, because they know that there's a good chance Mr. Trump is going to be president, and because of that, the money doesn't want to remove itself and then have to go buy it again, because everybody remembers when Mr. Trump came in, he tripled the price. The stock market went up almost triple in value. One moment it's at 12,000, the next thing you know, it's trading at 30,000. So, and now where are we at now? I mean, I think when he left office, the Dow Jones Industrial Average. I wish I had Forex. Let's find it again. Let's do it on here. Let's just show you. Let's see, where is it at? There it is. Let's put we'll find it in a second. Back. We'll put the Dow Jones Industrial Average in there. DJIA. There we are. It's it's basically hanging out around the 39,000 area. Let's go back 5 years. And we'll put it up on the screen, like so. Let's see. So Mr. Trump left office right here. Lost the election. Somewhere's around, where is it at? Somewhere's around here. Right in here. Right where those crosshairs are. The market has gone all the way up, gone back down to it again, and now it has picked up about, I guess about 8 or 9, like 6,000-7,000 points, and it's trying to hold on. And then when Mr. Trump took office, it was down in the 12s or 14 or 13 or something like that, and made it all the way up into the 33, 34. So they don't want to be weak. They don't want, in other words, they don't want to be out underinvested. Markets do not want to be underinvested. That's what it really comes down to. So there's not much of a reason when you see something like, oh, you didn't see it. Let me just go back to it again. They don't want to be underinvested. Let me go back to that again. Where's it at? Right there. So what they want to do is they're just going to basically hang out in here and not let go until the election. That's pretty much it. And when he wins, then it'll be it'll be even stronger a market, and we'll see inflation be dropping back down into the 1.25 area, 1.5 area, something like that. And that's so none of it. Giannis, when you try to explain to people about how to trade short term, or how to trade important numbers, important information, fundamentals. That's it. I think you called it fundamentals, right? How to trade fundamentals, fundamental data. Basically where we're at this point is the market is basically stalled and going slowly to nowhere until after the election. It would have to be something major, like he wasn't able to run. Now, he can be on the ballots everywhere. And then the next thing will be is that you can't sue people for policies you had. See, they're suing him for policies he had when he was president. They're actually suing him for them, saying that they were illegal or something like that. You can't do that. It's ridiculous. And so then they come up with crazy things to sue him for. They're suing him for things that make no sense. And everything's going to be thrown out, and it's just ridiculous. So the markets are stalled. They're basically stalled with no clear direction. And it's just going to sit that way for the next 7 months, 8 months. Where are we at now? We're in the middle of March. So you have April, May, June, July, August, September, and October. All right. Did I start off that way? April, May, June, July, August, September, October. So you have 8 months to the election. And that's pretty much what it comes down to. And so they're just going to go sideways to nowhere, and CPI will drift up more and more, and stocks always go up when inflation comes up, and that's why you're seeing inflation. You see the stocks higher on that screen there. Can you see that again? You see the stocks highlight that because inflation, when it, right here was, I guess it was 1.4 under Trump. And, inflation went up to about 10% there, then fell down, and then picked up again. And, inflation is now in the, I guess the core rate is in the fours. It's 3 times more than what it was under Trump. And so stocks have to stay firm just for that, because they can pass along the expenses. So does that make any sense there, Janos, or what? All right. So, I guess what we should do is come up with a title for today. At this point, I guess what we can say is that and what is that? That is the S&P 500, basically now back to where the news came out. And there's not much of a reason to not think things like that. So we're going to have to come up with a title today. What were we talking about more than anything else? We were talking about like yesterday's measurement relationship and how you measure things. And today we basically can say is that, inflation keeps stocks firm and currencies steady. That's pretty much what it is. They can't really put a direction together because the inflation is influencing it. The election is influencing it. So nothing they can do. So markets, let's see, what did I say before? It sounded so smart. Inflation keeps stocks, let's see, inflation keeps Forex stocks firm. Put an S in there, I guess. Stocks firm. That's pretty much the action. And I don't expect to see anything really different. Like I said, unless a fund falls apart or an incredibly global problem, I don't know. I just don't see it. I don't see anything moving these markets more than just background noise. Supply and demand. But I don't see them liquidating because we're not getting 7 cuts. That's pretty much really the game. All right, traders. This has been Doc from North America at our new time at 8:30 Eastern Standard in the United States versus 7:30 because of time change. Because we are on a Greenwich Mean Time basis. So, happy trails to you until we meet again. Happy trails to you, to all our webinar and trading friends. Later, traders. Have a safe and smart trading day. Catch you all on Wednesday. Happy to Hump Day, Wednesday.